Crypto has exploded in value before and crashed just as hard. But what if these so-called bubbles aren't just random hype cycles, but actually patterns we can learn from? Today, we're going to explore how previous crypto booms and busts might be the key to understanding where we're headed next in 2025. Hey everyone, welcome back to Crypto for Starters, the channel where we break down cryptocurrency in plain English, even if you're just getting started. In this video, we're diving into the wild world of crypto bubbles. We'll look at the biggest historical boom and bust moments, why they happened, and most importantly, what lessons they leave behind for us in 2025. If you've ever wondered how to spot a bubble before it pops, or what survives after the hype dies down, this one's for you. Let's get into it. Let's start with a simple question. What exactly is a crypto bubble? A bubble happens when the price of something rises way beyond its real value, usually because of hype, emotion, and a rush of new investors trying to get in before it's too late. In crypto, bubbles are supercharged. Prices can skyrocket in a matter of weeks, only to crash by 80% or more. But here's the interesting part. With each crash, crypto doesn't disappear, it evolves. Every past bubble has actually helped push the space forward. The very first crypto bubble happened back in 2011. At the time, Bitcoin was still a tiny project known mostly to tech hobbyists and early adopters. In a few short months, it went from just $1 to over $30. That's a 3,000% gain. But by that summer, it crashed all the way back down to $2. What caused it? It wasn't media hype or global interest. It was mostly excitement within a small community of believers. There weren't many exchanges, barely any wallets, and almost no regulation. It was just pure speculation and an unproven idea. But even in that tiny cycle, one thing became clear. Crypto was going to be volatile. Fast forward to 2013, and things got a little more serious. Bitcoin started the year at around $13, and by December, it had passed $1,100. This was the first time Bitcoin really hit mainstream headlines. Most people started buying in, more exchanges popped up, and for the first time, there was real money on the line. But just like before, it all came crashing down. By early 2015, Bitcoin had dropped below $200. One of the biggest reasons for this crash was the collapse of Mt. Gox, which at the time was the largest Bitcoin exchange in the world. They lost hundreds of thousands of customer Bitcoins due to poor security, and it sent shockwaves through the entire market. This cycle taught us that centralized platforms can be dangerous, and that trust in the crypto space is fragile. Once it's broken, the market reacts hard. Then came 2017, the ICO boom. This was the first time crypto felt like a global frenzy. Bitcoin hit $20,000. Ethereum surged from around $10 to over $1,400. And everyone suddenly had their own coin. ICOs, or initial coin offerings, became the go-to way to raise money. And some of them made millions in just a matter of minutes. But it was mostly unregulated, and many of the projects were either scams or poorly built ideas. When the SEC began cracking down and the reality of these projects sank in, the market collapsed again. But out of that mess came some of today's biggest innovations, including new altcoins, decentralized platforms, and the early building blocks of DeFi. So, while the crash was painful, it cleared the way for real builders to rise. Next, we arrive at 2021, a year that almost felt like two bubbles at once. This time, it wasn't just coins. NFTs were everywhere. Ethereum hit all-time highs, Solana exploded in popularity, and meme coins like Dogecoin and Shiba Inu made headlines around the world. People were making and losing fortunes overnight. At the same time, decentralized finance, or DeFi, became one of the hottest trends. Everyone wanted to stake, farm, or earn passive income. But again, the hype outpaced reality. Scams became rampant. Projects failed to deliver, and when central banks started raising interest rates, and tightening the money supply, it all came crashing down. Still, this bubble brought in institutions, helped improve blockchain scalability, and made the term crypto a household word. Now that we've talked to 4 major crypto bubbles, 2011, 2013, 2017, and 2021, what do they all have in common? First, the pattern is incredibly consistent. A new wave of technology or opportunity appears, early adopters get excited, prices start to rise, the media jumps in, and then there's FOMO, the fear of missing out, which starts to kick in, and it kicks in hard. That's when retail investors flood the market. But the fundamentals often can't support the prices. When reality catches up, the crash comes fast and brutal. And yet, every time, the strongest projects survive. New infrastructure is built, and the space keeps moving forward. So what can we learn from all this as we head deeper into 2025? First, we should expect volatility. It's not a glitch. It's a feature of how early, fast-growing markets evolve. Price swings, whether up or down, are part of how the crypto ecosystem matures. They shake out the weakest hands and test the conviction of everyone involved. Second, we need to be deeply skeptical of hype. Just because something is all over social media or trending on crypto Twitter doesn't mean it's valuable. In fact, the louder the buzz, the more cautious you should be. History shows that the projects that rise fastest on hype alone often fall just as quickly. Third, we have to zoom out and think long term. Crypto is still a young technology. It's not even 2 decades old. These cycles, no matter how wild they feel in the moment, are part of its growing pains. Each one contributes to better tools, stronger communities, and more mature investor behavior. And finally, we need to stay focused on the fundamentals. What is this project actually solving? Does it have a reason to exist beyond any speculation? Who's behind it? And are they building something that'll last? Asking those questions can help you avoid the hype traps and find the real value, the kind that survives after the bubble burst. Protecting your capital should always come first. Don't risk everything on a hype wave. Learn from the past, stay grounded, and you'll be in a much better position to ride the next big wave, whenever it comes. Crypto bubbles are intense. They bring massive gains and painful losses. But they're also how the space evolves. Every crash shakes out the noise and makes room for real progress. So the next time you hear someone say, "It's just another bubble," remember, the last few bubbles changed the world. If you found this breakdown helpful, hit that like button and subscribe to Crypto for Starters for more beginner-friendly crypto insights, and let me know in the comments section, which cycle did you live through? Thanks for watching, and I'll see you in the next one.